All right, you don't need a million stocks to make a bunch of money. You just need the right buckets, right? So today we're going to talk about capital allocation, and I'm going to give you a real life scenario of some investments I've been making over the years. It took about $5,000, and now it's worth about 20. And so I'm going to share with you everything that went on with it, the good, the bad, and the ugly. Yes, indeed, the ugly. All right, Camari Ellis here, y'all. 1/3 of the Black Wealth Rebels. Jimmy and Corey aren't here. I think Corey's with the baby somewhere. I think Jimmy's having dinner with the mayor and some lawyers, doing some real estate deals or something like that. So it's just me today, y'all. And so I'm going to talk to y'all about what's been going on with me. Many of y'all know. Oh, by the way, I'm late because y'all know I'm supposed to be on at 8, or we're supposed to be on at 8, because I was actually out doing a presentation with lawyers today as well, because everybody spooked about the stock market going up and down. But we'll talk about that some more later. All right. But all of y'all know, or a lot of y'all know, that a few months ago my dad passed. All right. And so me and my dad have been working on an investment portfolio that we've been building out for over a decade now. And so I'm going to share with you all that. But real quick, kind of the story behind it. So my dad wanted to invest for the grands, my children, and he had been buying I bonds. Now y'all know I've talked about I bonds. They give a good rate, government-backed security, government-backed bonds, but they don't do the best over time, right? So I convinced him to stop doing I bonds, sometimes double E bonds, but instead of investing in I bonds, instead invest into the stock market. And so I'm going to show you all some of the picks, or actually all of the picks, that I had him go, because I just got access to it. Um, this is an E-Trade account that we've been buying and selling stuff in for, like I said, over a decade. I think it's like 12 or 13 years. So we're going to go through that now. And, I want to talk about the importance of capital allocation. Capital allocation and asset allocation are very similar, but they're different as well. But let me pull up. I got my good handy dandy slides together. So let me pull those up real quick. Go through all the numbers. And if you got any questions, go ahead and throw them in, and we'll definitely get at it. All right. 2 seconds. 2 seconds. Dr. Chaz, what up? Welcome to Wealthy Wednesdays. I don't even think I said that. So welcome to Wealthy Wednesdays, y'all. Y'all know we do Wealthy Wednesdays every week. All right. Talking about how to get y'all wealthy. Particularly, usually focusing on some of the personal finance aspects. Now, y'all know we teach class about 3 times a week. We got Wealthy Wednesdays, we got Financial Fridays, and then we have Money Church Sundays. So Wealthy Wednesdays, we typically focus on personal finance issues. Fridays are more for the culture, more fun, but there's always lessons in all of those. And then Saturdays is strictly investments. All right. So I got my presentation up here, and let's see which way looks best. Which way y'all think looks best? Let's do this here. All right. So capital allocation and our ROI analysis. So I'm going to share with y'all how much money I made on these suckers, or loss. Sometimes there are some losses. It's total transparency here, y'all. Total transparency. All right. So again, capital allocation and ROI, return on investment analysis, going over all these. All right. Now, one thing I like to talk about a lot is capital allocation. We talk about a lot about asset allocation, but that's just a mixture of your stocks and bonds and your cash, sometimes your real estate. But now when you talk about capital allocation, it's like, where's the best place to put your money inside of your asset allocation? And a lot of times you have to factor in, what risk are you willing to take? And so a lot of times when I'm looking at my capital allocation, I'm thinking, well, where's the best place to put this money? And Does it make sense to put this money into this particular asset? Or does it make sense to just say, hey, I'll be better off just putting this in bonds and some good old US government bonds? No risk, no stress, no fuss, no muss. Just putting it there until I see something that's really, really attractive. All right. And so that's what I did here. All right. So, all right, what is capital allocation, right? So, strategic division, basically dividing your money into investments. Now, that's basically what I said. Now, you want to overlay that with what your personal blueprint, what you want your goals to be, what your overall vision is, okay? And then you should also looking at the critical skill where it takes to do this. Like a lot of times people say, I'm looking for a hot stock. And I'm like, you don't need a hot stock. You need a good asset allocation. But a lot of times people don't want to think about that. They don't want to think about that at all. All right. So why capital allocation? All right. Risk and return balance. Like I was just saying, where's money best allocated? Right? Where's money best suited to go? Where does money best fit what you want to happen? It's not necessarily always in a stock or a bond. Sometimes it's just best in cash. All right. So just keep that in mind. Now, using capital allocation, it's also a form of wealth protection. And it helps you develop a good mindset and help you develop emotional controls over your investments. What up, everybody? I see Don's in the building. What up, what up, what up? Jamil's in the building. What up, what up, what up? Yes, and condolences to Jimmy and his wife and their family because they just lost his mother-in-law as well. So shout out to them as well. Y'all say a prayer for them. All right, so the role, risk, and capital allocation. Now, I talk about asset allocation a lot, like I said before. It's really important to understand asset allocation to really master capital allocation. Each asset has its own behaviors. Each asset has its own characteristics. All right, each asset will do what they want to do. For example, the stock market, judged by the S&P 500, is down like somewhere between 7 and 5% year to date. Gold is up. I want to say it's up like 15, 16%. Bonds are up. All right. There's various other asset classes that are up. Everything isn't necessarily correlated or moves lockstep with the stock market. So you got to think about those things when you're building out your portfolio for the long term. All right. This is not a trading class. This is a long-term investing class. So keep that in mind. All right. So stocks typically have high growth, bunch of volatility, right? What else has a lot of volatility? Because I have alternatives in here, but I'll just go ahead and throw them in there. What's the major alternative? Jimmy's not here, but I'll say a Bitcoin or crypto. I can't say crypto when Jimmy's here, so I'll say it when he's not here. But we know crypto and Bitcoin can be very volatile, right? Where does that fit in your overall mix? So you got to be thinking about those things, right? Also bonds. Bonds tend to be income focused, but they are also like an anchor to your overall investments. So again, when the stock market is down, bonds tend to be stable, or they tend to be up maybe slightly, not a whole lot. All right. So it's just something to think about when you're looking at all those things. Now, understanding asset classes. Now we talked about that. Now there are some ticker symbols here. These are some of the ticker symbols that are in the portfolio, and we'll go over that. I believe we started. It looks like we went back to about 2012 when we started doing this. So we got about 12 to 13 years, and I think it's longer than that, though. All right. So equities. The equities in this portfolio is BX. All right. And which is Blackstone, and BAC. BAC is Bank of America. Now, full disclosure, I do not bank with BAC. I am not a fan of BAC, but I will invest in something that I think is a good investment and not necessarily be a user of said thing or said product or service. because I think it might make sense. All right. And then, AGG is another ETF that is a bond. It's a bond ETF. Then I also have some REITs and some cannabis in there. All right. And I also have some cash in there as well. All right. Let me blow this up. All right, so that's the snapshot of the portfolio as of 12/31/2024. So $5,600 in cash, overall stocks, little under 13,000. Bonds or fixed income, $484. Alternatives, $1,421 for a grand total of about a little under $21,000. So this is money that we grew over time. Now, my slides are messed up, so I apologize for that. The overall initial investment was $5,912, and now that's grown to $20,042. Now, the overall return over that time was 246%. That sounds good, but there's more to the story. There is more to this story. Now, again, from a portfolio management institutional look, I wanted to bring that because this is how I would have to present to my investment committee anytime I had to show my returns, right? So what I would have to do was called a performance attribution report. So I would have to tell you how much investment is pushing or pulling the overall investments in this portfolio. So right here, I got Blackstone. Now that's 96.5% of the total return. That sucker is pushing. Underperformance, TLRY, which is Tilray. And I got a whole story behind that. That's a negative drag. It pulled the portfolio down by 26%. All right, Bank of America. Bank of America helped push the overall portfolio by 24%. All right, and ACWI, that's an ETF, that added another 9.7% to the overall portfolio. All right. So like I said, I told you I was good, bad, and ugly. All right, so that Tilray position, that's this one right over here. Let's see here. Let me readjust this. Oh, I don't. So these are the equities. That's definitely Blackstone right there. All right. So now this is why I said that number, that 246 number, that's my portfolio. Had I done nothing and just brought SPY though, I would have made 275% on my money. So again, 246% looks good. 275%, it's even better. But I didn't do that. I wanted to add, I wanted to do some capital allocation. This money isn't for me. I wasn't looking for it to grow astronomical, but I wanted to be safe and grow. So that's why I added some of the things in there like bonds and some of the other stuff. So those are some of the things that I was thinking about when I started to build out this portfolio. All right. So just a few more slides and we'll get into this even more, a little bit more. So the liquidity buffer. So there's over $5,600 in cash right now. All right. So that gives me an opportunity to buy stuff, buy the dip. We're currently in a dip right now. We had a major jump today in the markets because the orange monkey changed his mind. I think he got a phone call from a couple of his billionaire buddies and said, yo, you messing up my money. And I think that made him reverse some of his tariff talk. Not all the way out of the woods, but changed up a little bit. All right. But now the cash also helps lower volatility. But there is no return on cash, right? So cash will always be a drag on performance. It will always be a drag on performance because you're not going to get anything out of it. Even if you put it in a great CD, great money market, high yield account, it's still usually never going to do that much as the overall stock market. However, it is good for times like now. Times like now where, you don't know what's going on. The shit's been hitting the fan. Oh boy, on orange is just doing whatever hell he wants to do. And so it's good to know that, all right, there's some dry powder, right? That's what they call cash, dry powder that you can deploy when things get crazy. So this is a live example of that. And that's part of the reason why I'm always so, I like my cash. I like having some cash. I'm okay with it dragging the portfolio a little bit because I believe there's always going to be opportunities to go and buy when things get crazy. All right. I love dumpster diving. And that's some of the things that happen here. Now, let's see. All right. So, lessons and strategy going forward. All right. Strategic growth, winners like BX, that was my best performer. All right. It's going to say avoid speculation. High risk bets like TLRY, her performance. Definitely her performance. All right. Global diversification. ETFs provide smoother compounding. That's what they do in the cash balance. Maintains reserves without excess. All right. Now, when you're doing this and I'm not done yet, I got some other stuff I want to go over with y'all as well. But things you always want to go over, and this is your long-term portfolio. Y'all know we say you should know that thing in and out. At minimum, you should be going over it once a year. As we get older, as we get busier, as we get to start moving, sometimes we miss some of those things. I don't think that's going to be our crew. But for those who might just have stumbled upon this and watching, you should look at your allocation at least once a year. At least once a year. What up, Anthony? How you doing, brother? Welcome. All right. And so, then you also want to think in classes. Gold acts different than stock. What's gold been performing at? Gold's up. Gold's up this year. All right. Bonds are up this year. They both move differently than stocks. Bitcoin, I saw hit like 75,000 and then bounced. I believe it's back up in the 80s, but it's definitely down from that 100K mark that it hit earlier on, right? But you want to start thinking about classes and how the different classes move, when they move, how they move. Times like this, when you're seeing all out craziness, people tend to run to the US dollar. They tend to buy bonds. They tend to buy gold. They tend to buy safe assets, even real estate. While the markets are a little bit crazy right now, people are still thinking about buying real estate. All right. Now, let me find, I just had it up 1 minute ago, y'all. I don't know what happened to it because I wanted to go over each one of the positions in the portfolio. I'm going to talk to you all because that Tilray one, that one is very interesting. That one's very interesting. And as I'm looking for my statement, I'll just walk you through it. So Tilray, I brought Tilray. Tilray is a cannabis marijuana company, and it had IPO'd a few years back. I brought the IPO. If any of y'all been rocking with me for a while, y'all know I've talked about Tilray. I've talked about Ford. I don't do a whole lot of saying, yo, you should buy this. But every now and again I do. And that was one of the times. And so Tilray previewed or debuted at like $23. I think I got it around 23 to $25. Tilray then continued to run and run. It was like the Energizer Bunny. You look it up, y'all, when y'all get a chance. It I know for me it got above $200. And then I think it got to like maybe 230, 240. I gotta go back and look. I sold. Personally, I sold. Not in this portfolio, but I sold. And then continued to run to $300. I continued to run $300. I didn't get that, but then it fell. It fell so hard that it's now worth like 54 cents a share. 54 cents a share. Now, mind you, this portfolio was something that me and my father working on together. My dad was a bit of a control freak. He never wanted to give me full-on access with it. So if I don't have access to it, I'm not necessarily looking at it. I'm only thinking about it when we talk about it. And so It was all long-term stuff. We had some cash sitting around. I said, here, buy this. I wasn't expecting for it to pop. It popped. We got lucky. I got lucky. I sold. He didn't. That's part of the downside of all this, right? Is that we weren't in tune enough to coordinate some of the stuff that I was looking at. Because I'm usually looking at the markets fairly often. I used to look every day, several times a day. Now it's probably down a couple times a week. And it salutes to Jimmy and Corey because they pushed me more to be more involved into the markets that I have been. Because now I'm more into my business. It's tax season, and I probably shouldn't be talking to y'all now. Hopefully y'all ready and got your taxes done. All right, but I'm more caught up in that now. I'm trying to find this. I'm trying to find this. Oh, here we go. I was trying to find this portfolio, and so I have it. Let's see. All right, so it keeps flipping on me. All right, so Bank of America, Blackstone, Starwood Properties Trust, Telray Brands. Those are all the ones, all the stocks that I had. Then I had some bond ETFs, AGG, and then I had ACWI, which is a global stock ETF. So those are some of the things that we got. Like I said, my dad was putting money into I-bonds. I said, no, Dad, that's a waste of money. Stop putting your money in the I-bonds. Let's put your money into stocks. And then it worked. So overall, he spent about $5,600. No, it's less than that. Let me look. I'm trying to find the total investing cost because I think it was like $4,600. He invested rather, $4,600, and I still haven't gotten full access to the account. And I'm looking at I was able to look at the cost basis for everything. $49.27. That's what it was. $49.27. And hold on, $49.27 and another $900. So roughly, it was roughly like $5,900, a little under $6,000. And that $6,000 is now turned into roughly $20,000 for his grands. Not for me. I don't get to use it. I get to store it. I don't get to use it. So again, it'll be for his grands. And that's what I wanted to talk to y'all about. Do y'all have any questions, any thoughts, any comments? Now, let me see here. Now, I had all of the returns, the singular returns. Like I gave y'all the attribution returns, but I didn't give y'all a singular return because the attribution takes into account the weighting, how much weight a position has in the portfolio. So each position has a weight, right? So one ETF might be 5% out of the 100, or it might be 7%, or it might be 10%. Each one of those is going to have a different weight. That's why we have the attribution report, to really narrow it down and say what is really going on here. All right, hold on. I see you, Jiggy. I'm coming right to you. Give me 1 second. Because I actually did a lot of work. I'm gonna say a fair amount of work on busting down all these. Because I wanted to know like how good my picks were. But it's also like kind of bittersweet, right? You can't really be too bad. I was like, Dad. Daddy, yo, why didn't you just let me take over the whole, the whole kid and caboodle? But it's a blessing either way. It's a blessing. Let me see. All right, so while I'm looking for that, Jigga says, blessing the pops. ill known y'all were in the same place. But that's cool as hell that y'all were able to chop it up about and invest together. Yeah. And I'll be honest, I'll be totally honest. I think my dad also did that strategically to make sure we had something to talk about, to make sure we had something to bond over. I mean, yeah, he was already buying the I bonds for his grands. Like my dad was just into that. But the stock aspect, to your point, that added on another dimension for us to talk about because he didn't, you know, stocks wasn't his thing. He was an accountant, damn good accountant, but he wasn't really into stocks like that, which I find funny because he did have other investment accounts, other stock accounts. So he didn't just like real estate because he was definitely a real estate investor. And so I, it's good. It's good. So it's legacy, right? So I told you I was going to share all this with y'all. All right. So let me go back. Let me go back. I'm trying to find the individuals that actually broke all these down. And I got them in a spreadsheet. The problem is I broke them down, then changed them around a little bit because I was trying to find. I was trying to get all the costs, the original costs I paid for them. All right. So let me see. Let me see. I'll share these. All right. So BX. BAC, AGG, ACWI. All right. So that's what's making up the portfolio. Right. So like I said, it's not a million pieces of stock or a million stock. It's not a million stocks. It's a couple. We got 5. You don't need a million. Right. And there's always going to be a couple that drive more than others. And here, so I'll tell you when I brought. So it looks like it did start in 2012. We was buying in 2012, 2016, 2018. Yeah, I'll show this all to you. It didn't even buy a whole lot of them. Did not buy a whole lot of them. I'm trying to get this to show up on the screen the way it needs to. Let me try it this way. Because part of the reason why I'm just not showing the statements is because the statements don't have the true cost basis. I had to have them research that and send it to me separately. All right, so here is. This is all right. Oh, it's being weird. It's being weird. Okay. All right, let me do this. Don't need that. Wait 1 second. Un momento, y'all. Un momento. But yeah, what other questions, whatever thoughts y'all got on this? Uh, all right, so that's the quick sheet I got on this. All right. I don't know. That don't look. Can y'all see that? See if I can blow that up. Y'all see that? Let me see if I put it this way. All right, so if y'all can't see that, I'll call it out. All right, that's a little better. All right, so and this is actually out of whack. So ACW paid $46.39 for it. We only had 10 shares of it. We held it for 12.9 years. The overall ROI on that was 124%, 124.1%. 186%. All right, AGG, again, that's the ETF that carries bonds. AGG stands for Aggregate Bond Index Composite. We paid $110, 5 shares. Oh, let me back up. So that was the price. The overall investment was $552. The current value is $482. All right, so it's down a little bit. And so that is down negative 12.63. So when I talk about the good and the bad, you always say, we're going to show you the good and the bad. So this is like melancholy. This is good. Well, it's actually good. It's not melancholy at all. It's good. This is good. All right. BAC, we brought BAC at $8.29. Anybody know how much Bank of America is trading for right now? Because it got smacked the other day. I think it bounced back a little bit today. Last I looked, it was $37. I'm sure it's much lower than that now. All right. But that bounced, or that grew about 345%. All right. Blackstone, I brought Blackstone when it was $16. And actually, I brought it twice, it looks like. So I brought it once in 2016, and then I brought it again in 2018. All right. And then STWD is a REIT. I brought that at 45, then I brought it at 30. I know I brought it because it had a strong dividend. And again, this money wasn't for me. It was for the next generation. So time was on our side because I'm not looking to use any of this money. All right. Let's see here. And then, like I said, Tilray. Totally wet the bed with Tilray, at least in this portfolio. I made money in the other portfolio, my personal money, but not in this one. And again, like I said, my pops, I didn't go put it on. I put it on me. I didn't hound him enough to say, "Yo, sell, sell, sell." I probably was somewhere working, so I wasn't even thinking about it at the time. So those are the things that that I'm looking at now. I'm looking at reconfiguring it, reallocating it for the next generation and the generation after them. And it's not a whole lot of money, right? This is not money to get rich, but it's better than nothing. And so it's better than nothing. All right, but I see there's a couple of questions there. All right, I read that one. All right, AMI 90. Are you familiar with wholesaling? Yes, I'm familiar with wholesaling. What kind of wholesaling are you talking about? All right. So that you can't say it. All right, I've read it to you. I could go. Listen, I could talk to y'all for hours about this shit. But we could come back and talk about this later, and I'll make sure I do a better job of presenting this. All right. And Morgan, I'm coming right to you. DCA is the cheat code, y'all. I want y'all to know that. What up, Shelby? Shelby, you get that text I sent you? All right. JC Morgan says, can you blow up the screen? My old eyes are having trouble. Listen, I think I'm older than you, JC. My eyes are definitely having trouble too. All right, Jake said, Bank of America is 37.15, up 6% on the day. I hold it, but I've been thinking about selling it for the past 6 months. I don't know what your cost basis is. I don't think I'm going to sell BAC. I brought it at $8.30 roughly. What's the point of selling? Now, more backstory on this. This started with BAC. Now, a lot of y'all know I used to do radio in Philly, still do it from time to time. I called for Bank of America to pop when it hit like $4. So it hit like $4 in, I would say 2010, 2011, somewhere around there. And I knew that was too big to fail. They wasn't going to let that go. And so I know we brought, maybe I brought 20 or 30 shares. I don't remember. But I remember we brought that and then we sold some. because that sell from BAC brought all the other stuff. And so I had to dig deeper to find out the actual transactions and the dates of everything. But I'm almost positive that I had BAC and sold it, and then had brought some other things as well. But we'll see. Why do you want to sell, Jacob? What about it don't you like? Now, I say DAC is a wealth cheat code because, again, this is a little bit of money. Now, it's not directly dollar cost averaging because it wasn't systematic in that way. It was semi-systematic. It was systematic-esque, right? So it wasn't monthly. It would happen maybe once or twice a year. Uh-huh. So yeah, that's what I've been working on, y'all. That's what I'm working on. What are y'all working on? Tell me what y'all think about this portfolio. You think I should sell everything and reallocate? Do you think I should keep ACW? Do you think I should keep AGG? Should I keep BAC? Should I keep BX? BX is the one though. That's my monster right there. I got BX did, what did I say? What did BX do? BX did over 600%. So that was my best call on that one. You know, so should I keep BX? Should I sell it? Clearly I want to get rid of not Starwood, Tilray, which hit a low today of 42 cents. It should have been out of my account. But oddly enough, while the orange man has been creating all kinds of havoc, I don't have access to my account to change things around. So it's just falling, and it just keeps falling and keeps falling. But it's all good. It's all good. I'm not worried about it. A little agitated by it, but I'm not. I ain't mad. I'm not mad at all. I'm not mad at all. But what do y'all think y'all should do? Throw it in the chat. But listen, y'all, we'll be back on Friday with Freedom Fridays. And we will talk even more about stocks or money or culture, Black culture, that is. And we'll have some fun. So until Friday, y'all, don't forget, the Bitcoin giveaway is Friday as well. Also, if y'all want to join the village, if y'all want to see into the minds of me, Jimmy, and Corey, how we go about our investments, how we go about our trades, especially their trades, they're way better than me. Right now, I'm still getting busy in terms of getting ready to get busy. I think that's the better way to put it, right? But if y'all want to do that, make sure y'all join the village. All right, come on over to blackwealthrebels.com, blackwealthrebels.com, where we have the real conversations, y'all. So until Friday, until the next time. All right, hold on. I'm not sure. Let's see here. No growth. Got in at 38. Oh, I got you. So Jigga's talking about his Bank of America shares. No growth. Got in at 38. Some change, about 2.5 years. Okay, what was your overall, your thesis, your time horizon when you first got into it? How long do you think it was going to take? All right, Garfield Couch. Ain't too many people watching. Hey, man, that's all right. These are the ones that's blessed. I don't have BX, but I have some BXMT. Wait a minute, what is BXMT? I know what that is. What is BXMT? All right. Bank of America Nike has been end of the year dumps for me. Okay. I was actually thinking about buying some Nike. I've been thinking about it, especially because I know it's getting hit because of the tariffs, but the tariffs are not going to last forever. Nike is a great brand. As Phil Knight says, they are a marketing company who sells shoes. I wish I had that clip, but that's what he says. He said, we're not a shoe company. We're a marketing company who sells shoes. So, all right. So Blackstone Mortgage Trust. BXMT. $18.31. Oh, and they're affiliated with Overall Blackstone as well. I don't know that I'm super familiar with them, but it looks like, are they a mortgage REIT? Wow, and it just said they hit the 52-week high today. Here at 1651. And now they're 1831. Here, let me put this up on the screen real quick. Share with y'all what I'm talking about. Just so you know, I'm not just making this stuff up. Let's see. Let's see. Took that off. $18.31. My bad. What is a year to date? Up 3% year to date. Wow, it's got a 10% dividend yield. So that's sexy and scary all at the same time. Definitely worth looking into, though. Definitely worth looking into. I say it's sexy because, listen, 10% is 10%. So every dollar I invest, I get $1.10 back. But when companies pay 10% dividend yields, usually there's something wrong with them. Usually, not always. So, but I'll definitely check it out. I'll definitely check it out. All right. What up, Nicole? The Honey Hustler's in the building. All right. Now I wonder which one has done better. So now I'm nerding out. I was supposed to be leaving 10 minutes ago. Ain't like I ain't got work to do. So, JC, by the way, I know you got work to do. All right, I'm gonna look at this one thing. Then I'm going. Then eyes gone. Eyes gone. All right, so I'm looking at BX. I got BX on the screen. Sure, y'all can't see that. Hopefully that's a little better. And let's look at BXMT. Oh, it would help if I spelled it right. It would help if I spelled it right. Come on. So it's not doing as well as BX. Now they're screaming at my dog. I can hear them upstairs. But yeah, I'll have to look at that though. I'm going to look at that. It's a 10% dividend, even if it's just for research purposes. Right? So, all right, y'all. Listen, y'all be great. Keep investing. And we'll be back on Friday. Listen, if y'all want to join the village, y'all want to have some more intimate conversations about your money and as it relates to Black culture, come on over to blackwealthrebels.com. Blackwealthrebels.com. See y'all soon.